Hi, and welcome to another daily recap. This is day 101, and it's September 17th, 2024, Tuesday. So, to summarize today's daily recap, I got one partial losing trade in EU, and I got a break even trade in GU. Let me quickly check whether it's a break even or trade. Yeah, it's a break even trade in GU. So, yeah, market went in my direction for a while, but it reversed during the news. So, it hit my break even stops in GU, and it uh, took out my partial stop loss. So yeah, let's jump into the charts and see what happened on this day 101. So yeah, this is day 101. I think I took the wrong screenshot. It's fine. So yeah, September 17, 2024. Okay, jumping into the daily. So what we have is yeah, jumping into the daily, the swing structure is bullish, the internal structure is also bullish. Whereas if you see the fractal structure is actually bearish, and the price has mitigated the daily supply. So I can expect the fractal bearish order flow to continue. But if you see a bigger picture, the internal structure is bullish, and the internal structure has reached the discount prices and mitigated the internal demand zone, which means the uh, pullback objective is completed. Maybe we can expect the run phase to start, and then we can expect the price to take out the weak internal high. That's also another possibility. Because I'm saying this because price has tapped into the last demand zone of the daily internal range. So if this demand fails, then probably this demand can hold, but this is already partially mitigated. So this is the only demand that can hold. I mean, this is the only unmitigated demand in this entire range. So if this demand fails, then there is a 50-50 chance that this strong internal low can fail. That's why this demand is so powerful. So So now since the price is in the supply, so we are in a mixed signal whether this supply can hold, whether whether this strong factor high can hold or not, or this can be taken. So this is a double signal. So that's why we are having 4 hour time frame to give us much more um, correct signal in the micro level. So here we go. This is the 4 hour chart. The 4 hour swing structure is bullish. The internal is also bullish. Price has tapped into the 4 hour demand. Not a convincing, I mean, 4 hour supply. Not a convincing one, but still a valid supply swept because it swept liquidity and it has some inducements here. So it is a valid POI, and it is within the daily supply as well. So this supply can hold and push the price down, but it would be more convincing if I had a 4 hour chop, a bearish chop. If that is the case, if the 4 hour chop is equivalent to bearish IBOS in H1. So uh, if I get a bearish chop, that would be more convincing to look for shorts. So that's what I was expecting. So even the 4 hour is giving me a mixed signal whether whether the price can continue flipping this supply, or price will respect this supply, or it can push down. But what I can analyze is price has mitigated the 4 hour supply, and there is an unmitigated demand here. So what we can expect is we know the concept that price moves from supply to demand, demand to supply. Simple. Price mitigated the demand supply. Now we can mitigate the supply. Either it can flip the supply, it can go further down, or it can respect the supply, take out the buy side liquidity above this supply. So either of these two things can happen. But for now, what we know is price can come down to mitigate this 4 hour demand at least to take out these equal lows and fill this fair value gap. So the um, temporary bias is bearish. So moving on, you can see it is very clearly. You can see the imbalance here. The price can come to fill the imbalance and tap into the 4 hour demand, and then it can push up, or it can either give a slight reaction and then it can flip it. So uh, it's a price action for later. But what we know now is price can come down to fill the imbalance. Simple. Now we know the bias, right? So here it is. In H1, it's much more clear because the swing structure is bearish, and this is strong swing high, weak swing low, and the internal structure is bullish. Price swept strong buy side liquidity here, and thus we can expect the price to come down. So we can't just enter shorts as soon as the price swept the buy side liquidity. We must know that the institutions are using that buy side liquidity to push the price down. How can we know? It's simple, using the change of character concept. Here we can see whether the price has chalk bearish, but for now there is no chalk bearish. So what we can conclude is price took the buy side liquidity, but the supply is not interested. I mean, or we can also say the supply is weak to push the price down. So you can see this is the uh, yeah, this is the chalk level. I mean the fractal low, weak fractal low. If this is taken, then I can say that the price can continue and mitigate the 4-hour demand. So this is the good 4-hour demand, which can be the H1 demand within the 4-hour demand, which can be mitigated. If this is not mitigated, then this would be the extreme H1 demand. So, so now we know what. Now we are clear that about what we can expect. We are expecting price to take out the Asian ice and chalk bearish. Simple. If it chalks bearish, we can take look for shorts. For longs, yeah. Here you can see I will enter a T10. For longs, I must see the price to take out the weak fractal high, and then I can look to continue the bullish order flow till the price takes out the strong. I mean, takes out or weaks the strong swing high. The second point is price took the buy side liquidity. That's I can expect the price to be bearish today as to make an internal pullback towards the 4-hour demand. That's what I was telling you, right? For this, ideally, I would like to see the price take out some buy side liquidity and make a strong push down. So, which is already taken while I'm doing analysis. You can see price has taken the Asian ice. Now I want to see the price push down so that with the fresh POI, I can look to trade shorts and target the mean up to the 4-hour demand. And also there is only this area of demand, so there is no opposing demands. So I can have a good risk to reward. So moving on, uh, yeah, this is my higher time frame objective. Daily internal run phase is bullish, and 4-hour internal pullback phase, and it's bearish. So I'm going to stick with the bearish because it's my immediate bias. So this is my game plan, simple, and as expected, price made the took the buy side liquidity and made an eye chalk. Eye chalk. It's not actually a chalk. It's just the eye chalk. Uh, this could be, a trap. This could be a trap. This could be, a bearish, a bullish sweep zone formation. Price taking out the buy side liquidity, taking a sell side liquidity, and then showing the actual momentum up. I want to see the real fractal low to be taken out. This is the real fractal low. This is my part of the game. You can see this is the part of the only when the price takes out the fractal low, I'll be interested in taking shots. Apart from that, I am not going to take any shots until and unless price takes out the short. I mean, strong internal low, I mean, the strong fractal low. So I was waiting for the 8, this is 7 a.m. candle, that is Frankfurt candle, this is 8 a.m. London open candle. So I was waiting for the 8 a.m. candle to finish printing to go for shots to pay the internal pullback up. So, I was convinced that I can look for shorts because of this liquidity sweep. So I just want one more candle. So even if the candle is like this, I was happy to wait for the price to pull back and take shots from here because you can see the liquidity sweep, it is massive, right? But the 8 a.m. candle just showed everyone that it was a fake one, and the price actually pushed up, and it almost took out the weak fractal line. And during the process, it also made a bullish divergence with DXY, which means this liquidity sweep is actually a bullish divergence with DXY. So this sell side liquidity sweep is much more stronger than this buy side liquidity sweep. So that's how I use DXY, I mean the discounted divergence. So now I can use this POI to look for longs. Uh, yeah, and follow the daily internal run phase. Look for longs, quick longs, and then I can look, wrap up. Possibly, I can break even once the price reaches the structural high. Because it's very risky because I'm having my immediate 4-hour bias is bearish, and I'm inside the 4-hour supply, and also price has swept the strong buy side liquidity. So there is high chance that the price can come down anytime, respecting the strong strong swing high. So this is phase C. The price is not in the OT. So higher time frame, yeah, higher time frame supporting the medium time frame idea, but the 4-hour is not supporting. So I can I'm not satisfied with this tick, so I can reject this one. So, but these two boxes are ticked because I'm trading with in line with the medium time frame order flow as well as this POI with beautiful POI. So, what are the other confluences? Price swept the Asian low and there is a DXY here. So, what is the risk factor? Opposing 4-hour supply, opposing 4-hour bias, lot of portfolio news, price swept the buy side liquidity, and price, and yeah, that's it. And yeah, uh, price could reverse of price could sorry this strong swing high could hold and the price could reverse at any time. So we are having multiple risk factors, but still, so there is no lid here, only imbalances. So the only way that I could look for traders using this H1, I mean the M15 lid and taking longs or waiting for a confirmation entry. But I decided to go for the M15 lid. Here we okay, sorry. This is euro dollar and this is GBP USD. Yeah, here you go, euro dollar again. So this is H1 led and the price actually mitigated the EM15 fair value gap. So I decided, okay, price has mitigated the fair value gap, taking out this lid. So this lid has more value because there is a fair value gap below. So price has mitigated the fair value gap. I placed my order here, got tagged in, price went all the way up. I took the fifth region from here to here. It was not coming to 61.8 percentage. So I I just put my stop loss just below the 61.8 percentage mark. So that's where the price came down and took my stops here. So this candle actually took my stops. The next candle was a news candle and it, took out my stops completely. So thank God I reduced my stop uh, to just, zero point 0.3 instead of zero point 0.5. Okay, and yeah, apart from that, once the price pushed down, I decided to go continue the bearish order flow because now the price is aligned with the immediate bias of the 4-hour time frame. You can see the 4-hour bias is bearish. Now the price is aligned. Now I can look for the price TLC1 price to take out the M15 lead and I can look to play the shorts. But it's already 4:13, 14:35, so only two more candles to go, two more 15 minutes candles to go. So obviously that the price action will not happen. So yeah, it's end of the day. So I just left the desk with one partial loss in EU. So yeah, uh, it was actually not a very bad trade. I know it's a medium probability trade, more kind of a lower end of medium probability trade because higher time frame was not in my support. But still, I took the trade because other confluences were there. Sometimes it may play out, sometimes it may not play out. In this case, it played out, but it just reversed and took my stops. So it is what it is. So let's keep doing the same thing consistently one day or another, like these would turn into profits. Okay, let's jump into GU and see what happened on GU and how I got the break even trade on GU. Hi, hello, and yeah, let's continue our analysis. So, jumping into the GU of DTA 101. So, today, as I already told you, a break even trade. So, let's break that down and see what happened today. So, let's start from the daily. Yeah, this is more than enough for me. Yeah, this is daily chart. The swing structure is bullish. Internal is also bullish. Price actually made the fractal structure is bearish, but price has mitigated the lower time frame demand. I think it has swept some liquidity and it has filled some imbalance here. So let me clearly show you that one. Yeah, price has actually filled some imbalance here, and this is lower time frame demand. And see you can see this in 1 hour chart or 15-minute chart. This is a lower time frame chart, and price has just swept the sell side liquidity below this lower time frame uh, demand zone, and also below this demand zone there is a daily imbalance. So this is perfect for the price to react from, and then take out the strong internal, I mean strong fractal high. Also, there is a presence of low resistance liquidity being built up in the daily. So all this adding up, and one more thing is that price as a price made this bearish chop without mitigating into the higher time frame supply. So the daily supply is right here. So what we can expect is this could be a fake move to trap the early sellers and induce some buy side liquidity, and then price can push up. to mitigate the daily demand, and then we can see the real bearish move. So for now, these are the conditions for the price to go up. So if I see from the bearish perspective, I can see that the price has made a bearish chop. It has flipped this demand. So this is a flip zone actually. So this is a flip zone, very high probability POI, and this is a weak fractal low, and which the price can easily target down. So it's kind of a mixed signal in daily. So I think I need to jump into 4 hour and the 1 hour to confirm the session direction and trade in line with the session bias. So this is the 4 hour chart. Yeah, this is the 4 hour chart. So the swing structure is bullish and the internal is also bullish. Price has tapped into the daily the 4 hour supply within the daily supply. So we can expect the price to come down to make internal pullback. But again, if I go for shorts, then I would be trading against a strong bullish momentum. And with this presence of fair value gap, price can eventually tap into here and then push up. So there is a chance of the price being not going deep as I expected, but the price can go down. So that is a probability. So price mitigated existing for our supply, I can play the phase C shorts. I would be playing against the internal structure. Yeah, I would be playing against the internal structure. Actually, this is not phase C shorts. Phase C is pro internal. Actually, this becomes phase D shorts. So this would be against counter internal. So this is counter internal, so it would be a bit low probability. So longs would be high probability as the price swept strong sell side liquidity and then I was bullish. Here you can see price swept a strong sell side liquidity and then price made strong push up. So this strong bullish momentum could be enough to take out the weak swing high. And probably the price is also reached the discount prices. This is 50 percentage. So prices this is 38 percentage. This is 50 percentage. But with this leg, this is bit deeper pullback and with a strong you know uh, say, liquidity sweep and with a strong bullish force, we can expect the price to continue the bullish momentum and take out the weak swing high. So longs becomes high probability today. So daily also says there is a confidence that the price can be bullish in daily. Now there is a chance that the price can go up in the 4 hour also. So now jump into the let's see a zoomed in version. Yeah, here you can see if the price makes a bearish chop, that would be high probability to take for shorts because I can expect that bearish order flow to hold till the price reaches the 4 hour demand. So since there is no bearish chop, so I'm not interested in taking shorts, but still I can look for shorts till the price fill this 4 hour imbalance in the using the H1 time frame and with aggressive risk management. This is H1. The swing structure is bearish and the internal structure is bullish, but the fractal structure is bearish. The price has mitigated the higher time frame POI and then it chopped bearish, which means I can expect the price to go down a bit, to make a deeper internal pullback, at least to the 50 percentage of the range of this internal range. Yeah, this becomes phase D shorts. I am trading. I'm not taking phase A longs, which could be high probability, and I'm taking low probability phase D shorts. So price is in the pro swing phase. This is a high probability for me to go longs and then target the sorry sorry price. The swing structure is actually bearish, so this is the weak swing low. So yeah, shorts are now phase B shorts, which is a kind of medium probability because I'm expecting the price to come down and take out the weak swing low. So let's see. This is a bit zoomed in version. Okay, price didn't make bearish chalk. So this is the chalk line. So if the price makes a bearish chalk, then I can look for the um, you know price to continue that bearish order flow till the price reaches the 50 percentage of the internal range, or at least to this demand zone or something like that. So I could manage my risk effectively. For longs, I need to see the price take out the weak fractal eye, indicating the continuation of the bullish order flow. Ideally, would love to see a bullish sweep zone. So, what is the bullish sweep zone? Price actually, taking out some sell side liquidity, pushing up, making bullish chop, and then with a fresh POI, I can look to trade. Boom. So this is a bullish sweep zone. So actually at 9 a.m., so price actually made a bullish DXY, which indicates that the price can be bullish during the session, and it has also took out the fractal line. So if this becomes a good POI, because I can't take this is the region where the price swept all the sell side liquidity and started to push up. So eventually, I am expecting the price to come down, mitigate this POI, and then I can look for long. So at 940, price made a clear shift, body close. Thus, I can look for longs, expecting the price to continue to take out the weak swing high. And one more thing is this is the higher time frame objective that I must keep in mind. Daily is end of internal pullback, bullish move to take out the internal high. So if you can remember the daily bias, then you must remember this one. Bullish. So the daily is bullish. They say to take out the weak swing high or to make an internal pullback. So this is a kind of neutral, but in daily we are having a clear bullish bias. So this is phase C longs. I'm continuing the pro internal pro fractal order flow, but price is already in the premium prices. So anytime the price could reverse and then start, you know, the pullback objective could end and the run to external leg objective could start. So so since I'm a day trader, so I can just trade with the direction of the session and then look to capture, scalp few pips. Since I'm trading with just input gain, I can just scalp few pips before the price reverses down post uh, New York Open. So yeah, this is phase C. So higher time frame kind of supporting medium time frame order flow, and it is in line with the medium time frame order flow because price is the traffic structure is still bullish. So and this is also true because you can see the price has swept liquidity. This POI has swept liquidity as displacement within the order flow is unmitigated. It has not been mitigated, and it is formed during the kill zone, and it has flipped an order block. Where you can see this is the POI that made a shift in this change. So you can see the reaction here. Price actually reacted and then pulled back and then pushed up. So this is kind of flip zone, but it is not clearly visible. And yeah, what are the other confluences supporting my trade? It has swept the Asian lows, presence of buy side liquidity, new scandal. I think I should say a few words about this one. Yeah, this is one second. Yeah, this is a new scandal. This scandal is actually a new scandal. So obviously, you know that there would be a ton of liquidity above a new scandal. So price hasn't took the wiser liquidity. So price can target this new scandal and then take the liquidity above. So this I analyzed during the trade only. Yeah, I didn't analyze in the first place, but I just got that information during while gathering positive confluences. So presence of buy side liquidity above the new scandal and bullish S&P divergence with the XY. So positive confluences. What are the risk factors? Price is in the 4-hour supply, and price has already reached the premium prices of the H1 swing range, so it can reverse anytime and start the run to external leg. And there is a lot of red folder news coming up, which means there could be a lot of manipulations, and price can even liquidate. Even if I keep my stops below this POI, price can liquidate that one, and then it can push in my direction. So there is a lot of risk factors. Even if the trade goes in my direction, there would definitely be a stop loss hunt before going in my direction. So I must be cautious in placing the trade and managing my risk. So entry method is um, LC1 with M15 lead. It is very clear. So I can just take M15 with LC lead and then take longs. It's very simple. Yeah, price actually took the lead, place my trade here, got tagged in, and yeah, price went in my direction. So if I take fib level from here to here, this is the 61.8 percentage level. So if the price pulls back down, I can expect the price uh, not to pull back below the 61.81 percentage level. So that's why I'm placing my stop to break even. Now it's a risk-free trade, and even if the price respects this supply, I'm expecting the price to pull back to 61.8 and then start to go up. So yeah, that's the ideology of my placing the stop loss to break even. And yeah, it actually took my stop loss, and it is a good decision to break even the trade. I tell you why. As I already told you, you know, one sec, the price actually went up. Yeah, this is the news scandal. So you can see price took my stops just before the news. So if the price took my stops during the news, then I could be, completely taken off. And yeah, actually price didn't go in my direction, and this S&P divergence failed, and price it invalidated this PY, flipped this one, and then started to go down. which means London has made the high of the day today. So that's very obvious. So yeah, it is what it is. And yeah, actually, the today's trading session was bearish, and my high time frame bias, I wrongly analyzed the high time frame bias, and the bias was actually bearish today, and the price started to move down. With the This is the high of the day, and price started to move down. And yeah, this is the second trade that I look to continue this bearish order flow with this M15 lid, but price level came and took the M15 lid, not mitigated the POI. So yeah, to conclude, I this is a break-even trade, and in EU I took one loss, one partial loss. Overall, it's a good trading day. It executed my strategy with perfection. Uh, Maybe I should avoid myself trading during the news time, but sometimes it may play out and give me some profits, but most of the times it is not playing out. I think I must be aware of what is happening during the news with my strategy. So which will be clear during the September month review. Okay, guys. See you. So today is a partial loss day. So see you tomorrow. Until then, cheers, guys. Bye.